Nigeria's initiative to expand credit access, a comprehensive analysis. Welcome to the Bold African Voice, BAV. I'm Abdul Karim Kargbo, born and raised in Africa. Today we dive into Nigeria's bold new initiative to expand credit access through the National Credit Guarantee Company, NCGC. President Bola Tinubu's push to make credit available for businesses, women, youth, and the underserved is a game changer for Nigeria's economic landscape. We'll explore the potential impacts, compare Nigeria's approach to other African countries, and look ahead to the future of financial inclusion across the continent. Stay with us as we break down this important development. In a significant move to bolster economic growth and financial inclusion, Nigerian President Bola Tinubu announced plans to establish a National Credit Guarantee Company, NCGC, by May 2025. This initiative aims to enhance credit access for businesses and individuals, particularly targeting underserved groups such as women and youth. The NCGC will collaborate with key government institutions, including the Bank of Industry, Nigerian Consumer Credit Corporation, Nigerian Sovereign Investment Agency, and Ministry of Finance Incorporated, as well as private sector entities and multilateral organizations. The overarching goal is to strengthen the financial system's confidence, drive reindustrialization, and improve living standards across Nigeria. Critical analysis of the initiative. The establishment of the NCGC represents a strategic effort to address Nigeria's long-standing challenges related to credit access. Historically, Nigerian financial institutions have been cautious in extending credit, often due to perceived risks associated with lending to certain sectors and demographics. By introducing a national credit guarantee mechanism, the government seeks to mitigate these risks, thereby encouraging financial institutions to lend more freely. However, the success of this initiative hinges on several critical factors. Operational transparency and efficiency. The NCGC must operate with a high degree of transparency and efficiency to gain the trust of both financial institutions and borrowers. Clear guidelines and prompt processing of claims are essential to prevent bureaucratic delays that could undermine the program's objectives. Risk assessment and management. Implementing robust risk assessment frameworks is crucial to ensure that the guarantee scheme does not inadvertently encourage reckless lending. A balanced approach is necessary to support economic growth while maintaining financial stability. Monitoring and evaluation. Continuous monitoring and evaluation mechanisms will be vital to assess the impact of the NCGC on credit access and economic growth. Adjustments may be required based on empirical data and feedback from stakeholders. Comparative perspective, Africa-wide credit access. Across Africa, access to credit remains a significant challenge, with many countries grappling with low financial inclusion rates. Initiatives similar to Nigeria's NCGC have been implemented in various forms. Kenya. The introduction of mobile money platforms like M-Pesa has revolutionized financial inclusion, enabling millions to access credit through mobile phones. Additionally, the government has established credit guarantee schemes to support small and medium-sized enterprises, SMEs. South Africa. The South African government has implemented various financial inclusion programs, including credit guarantee schemes aimed at supporting SMEs and promoting economic growth. Ghana. Ghana has introduced initiatives to enhance access to credit for businesses, focusing on improving the financial ecosystem and supporting economic development. These examples highlight the diverse approaches African nations are adopting to improve credit access, each tailored to their unique economic contexts and challenges. Forward-looking considerations. As Nigeria moves forward with the establishment of the NCGC, several considerations are pertinent. Integration with digital financial services. Leveraging digital platforms can enhance the reach and efficiency of the NCGC. Integrating with existing fintech solutions could streamline application processes and broaden access to credit. Capacity building. Investing in capacity building for both financial institutions and potential borrowers is essential. Financial literacy programs can empower individuals and businesses to utilize credit responsibly, thereby reducing default rates. Sustainability and long-term impact. Ensuring the sustainability of the NCGC will require careful financial planning and risk management. The initiative should aim for long-term economic impact, contributing to structural changes in the Nigerian economy. Latest developments. As of January 1, 2025, President Tinubu's announcement has garnered significant attention. Stakeholders are keenly observing the government's commitment to implementing the NCGC and its potential to transform Nigeria's financial landscape. The collaboration with various institutions underscores a comprehensive approach to addressing credit access challenges. Nigeria's initiative to establish the National Credit Guarantee Company represents a proactive step toward enhancing financial inclusion and stimulating economic growth. While the potential benefits are substantial, the success of this initiative will depend on meticulous planning, effective implementation, and continuous evaluation to ensure it meets the diverse needs of Nigerian citizens and businesses. Challenges and risks ahead. Despite the ambitious nature of the National Credit Guarantee Company (NCGC) initiative, there are several challenges that Nigeria must address to ensure its success. These challenges range from structural issues within the financial sector to socio-economic factors that could limit the impact of the program. A critical analysis reveals some key hurdles that could undermine the long-term success of the credit access expansion. 1. High interest rates. One of the main challenges for many businesses and individuals in Nigeria is the high interest rates charged by financial institutions. Even with the guarantee from the NCGC, many institutions may still impose prohibitive rates on loans, limiting their accessibility for small businesses and individuals who are already struggling with economic pressures. If the NCGC does not find a way to work alongside the Central Bank of Nigeria, CBN, to lower borrowing costs, the program may not effectively stimulate the economy. 2. Financial infrastructure gaps. Nigeria's financial infrastructure, particularly in rural areas, is underdeveloped. Many parts of the country still face limited access to banking services, making it difficult for potential borrowers to apply for credit, even if guarantees are in place. For the NCGC to reach its full potential, it will be necessary to improve the accessibility and reliability of banking services across the nation. This may require significant investments in financial technology, fintech solutions, and physical infrastructure. 3. Corruption and mismanagement. Nigeria has long struggled with corruption, which could pose a serious risk to the effective implementation of the NCGC. If funds are not managed transparently, the initiative may fail to reach its target audiences. There is also the risk of misallocation of credit, where loans may be given to businesses or individuals who do not truly need them, while underserved communities continue to lack access. The Nigerian government will need to establish strong oversight and accountability mechanisms to combat corruption and ensure that the program benefits the right groups. 4. Inadequate credit scoring systems. Nigeria's credit scoring systems remain rudimentary compared to more developed economies. A robust system that accurately reflects the creditworthiness of individuals and businesses is necessary to ensure that the right borrowers receive credit and that lenders are protected from defaults. Without an effective credit scoring system, there is a risk that lenders may become hesitant to participate, limiting the success of the NCGC. Comparing with regional credit initiatives across Africa, many countries have initiated similar credit programs, but the outcomes have varied based on local conditions. Looking at regional examples can provide valuable insights for Nigeria's NCGC. Kenya. Kenya's mobile money revolution, spearheaded by M-Pesa, has significantly improved financial inclusion by enabling millions of unbanked individuals to access microcredit. The mobile credit systems like M-Shwari have allowed individuals to borrow money through their mobile phones without needing a traditional bank account. The success of Kenya's model has been attributed to its innovative approach and widespread adoption of mobile technology. Nigeria could benefit from exploring mobile solutions to complement the NCGC, ensuring that rural populations and the underbanked can also access credit. Ethiopia. Ethiopia has faced similar challenges in expanding credit access, but the government has partnered with microfinance institutions to provide small loans to businesses in rural areas. While these programs have had a positive impact, Ethiopia's experience highlights the importance of tailoring programs to the local context, especially for small and medium-sized enterprises, SMEs, in rural areas. Nigeria could take a cue from Ethiopia by targeting specific sectors such as agriculture, which is a significant part of Nigeria's economy, with targeted credit initiatives. South Africa. South Africa's national credit regulator has been instrumental in promoting fair lending practices and protecting consumers from over-indebtedness. South Africa's focus on consumer protection and financial literacy could be crucial for Nigeria as it rolls out the NCGC. Educating the public on the responsible use of credit and the consequences of overborrowing will be essential to the long-term sustainability of the initiative. Looking ahead, opportunities and strategic approaches. The NCGC initiative presents a significant opportunity for Nigeria to transform its financial landscape and foster economic growth. However, for this to happen, the government will need to implement a strategic approach that maximizes the potential benefits while addressing the challenges discussed above. 1. Leveraging digital platforms. Nigeria's fintech sector is rapidly growing and offers a promising opportunity to enhance the reach of the NCGC. Digital platforms could be used to simplify the credit application process, provide microloans to underserved populations, and offer financial literacy programs to educate potential borrowers. Partnerships with fintech companies could expand the scope of the program and increase its efficiency, reaching both urban and rural populations. 2. Focusing on financial inclusion. The NCGC should prioritize financial inclusion, particularly for women, youth, and rural populations. Nigeria has one of the highest gender gaps in financial inclusion, with many women unable to access loans or start businesses due to cultural and financial barriers. Tailored initiatives that address these barriers could help to bridge the gap and empower marginalized groups. 3. Encouraging private sector participation. The success of the NCGC will depend largely on the involvement of the private sector. The Nigerian government must create a conducive environment for private financial institutions to partner in the program. This could include providing tax incentives, reducing regulatory burdens, and ensuring that the credit guarantee scheme is attractive to investors. Collaborative partnerships with private banks, insurance companies, and venture capital firms could unlock new sources of funding for the program and improve its reach. 4. Monitoring and feedback mechanisms. Effective monitoring and feedback mechanisms are essential for assessing the impact of the NCGC on credit access, business growth, and economic development. Regular reviews of the program's performance should be conducted, and adjustments should be made based on data and feedback from stakeholders. These adjustments could include revising credit criteria, expanding eligibility for guarantees, or even revisiting interest rate ceilings. Current updates. Reactions to the NCGC announcement. As Nigeria prepares to roll out the NCGC in May 2025, reactions from key stakeholders within the financial sector and business community have been generally positive. Many have expressed optimism about the potential impact of the initiative on small and medium-sized enterprises, SMEs, which have long struggled with limited access to credit. Moreover, there is hope that the NCGC will provide much-needed support to the agricultural sector, which plays a pivotal role in Nigeria's economy. However, some concerns have been raised about the timeline for implementation and the ability of the Nigerian government to manage such a large-scale initiative effectively. Financial institutions are eager to learn more about the operational details of the NCGC and how they can engage with the program to maximize its benefits for both lenders and borrowers. The Nigerian public, particularly those in the informal sector, remains cautiously optimistic. Many are eager to see how the NCGC will translate into tangible benefits, especially in terms of job creation and economic empowerment. As the Nigerian government works toward the official launch, there will undoubtedly be further updates and developments that will shape the future of credit access in the country. The success or failure of the NCGC will be closely watched by both domestic and international stakeholders as Nigeria's model could serve as a template for other countries seeking to expand access to credit and boost economic growth across the African continent. Global interest and regional implications for credit expansion. As Nigeria moves forward with the National Credit Guarantee Company, NCGC, the international community is also keenly watching the country's efforts to reshape its financial landscape. The outcome of this initiative could have far-reaching implications, not just for Nigeria, but for the entire African continent. 1. Potential for replication across Africa. Nigeria's efforts to boost credit access could inspire other African nations grappling with similar financial inclusion challenges. Countries such as Egypt, Uganda, and Senegal, which are also trying to improve access to finance for their citizens and businesses, may look to the NCGC model for guidance. If successful, Nigeria's program could serve as a blueprint for wider regional adoption, especially in countries where access to capital is limited due to risk-averse banking systems. 2. Influence on African Continental Free Trade Area, AFCFTA. The African Continental Free Trade Area, AFCFTA, which aims to promote intra-Africa trade, could benefit from enhanced credit access across the continent. Improved access to finance can help businesses scale up operations, expand across borders, and take advantage of the tariff-free trade agreements under AFCFTA. Nigeria's initiative could help unlock new opportunities for cross-border trade, especially for small businesses and startups that have historically struggled with securing loans. 3. Impact on foreign direct investment, FDI. A robust credit system can create a favorable environment for attracting foreign direct investment, FDI. Investors are often deterred by limited access to credit in emerging markets, and Nigeria's credit guarantee scheme could make the country more attractive to global investors. As international businesses look for opportunities in Africa, they will likely be drawn to countries with strong financial institutions and accessible lending systems. If successful, Nigeria's move could lead to increased FDI, which would further fuel economic growth. Challenges for stakeholders and institutions involved. The successful implementation of the NCGC will require collaboration between various stakeholders, including government agencies, private financial institutions, and development partners. Each of these groups will face distinct challenges that could impact the initiative's success. 1. Government institutions' role. The Nigerian government will play a central role in setting the parameters for the NCGC and ensuring its proper implementation. However, one of the primary challenges facing government agencies involved in this initiative is the need for consistent policy alignment and coordination. The different government entities involved, such as the Ministry of Finance Incorporated, the Nigerian Sovereign Investment Agency, and the Bank of Industry, must work together effectively to avoid duplication of efforts and ensure that resources are allocated efficiently. 2. Private sector engagement. While the government is the driving force behind the NCGC, the private financial sector's buy-in is crucial to its success. Banks, insurance companies, and other financial institutions will need to adapt their operations to fit the new credit guarantee framework. Many private institutions may hesitate to fully embrace the program, particularly if they are not convinced of its long-term sustainability or if they face additional regulatory burdens. Ensuring that the NCGC is attractive to the private sector will require addressing these concerns and offering incentives that make it more appealing for private lenders to participate. 3. Multilateral partnerships. As noted by President Tinubu, the NCGC will partner with multilateral institutions such as the World Bank and African Development Bank. These partnerships can provide technical expertise and financial resources that will help the NCGC succeed. However, engaging with multilateral institutions comes with its own set of challenges, such as aligning the interests of both national and international stakeholders, ensuring that financing from these bodies is effectively utilized, and maintaining a focus on local economic priorities while fulfilling global commitments. Global financial trends and their influence on the NCGC. In the context of the broader global financial landscape, several emerging trends could influence the NCGC initiative's trajectory. The ongoing trends of digitization, fintech development, and climate finance could all have an impact on the design and implementation of Nigeria's credit guarantee program. 1. Fintech revolution. The growing fintech sector in Africa presents a promising opportunity for Nigeria's credit initiative. Innovations in mobile banking, blockchain, and peer-to-peer lending platforms have made it easier for individuals and businesses to access credit without going through traditional financial institutions. The NCGC could tap into these technological advances by integrating fintech solutions into its operations. This would improve accessibility, speed up the approval process for loans, and make credit more affordable for Nigerians across the country, including in rural areas where banking infrastructure is limited. 2. Climate finance and green investments. As the global financial sector increasingly focuses on climate change and sustainability, Nigeria's credit expansion program could benefit from green finance initiatives. If the NCGC integrates environmental, social, and governance (ESG) criteria into its lending practices, it could attract funding from international development banks and other financial institutions that are focused on sustainable investments. This could provide additional capital for businesses in sectors such as renewable energy, agriculture, and sustainable infrastructure, further boosting Nigeria's economic growth and job creation potential. 3. Digitally driven economic growth. Africa's rapid digital transformation is creating new economic opportunities and reshaping how businesses and consumers interact with financial services. The Nigerian government's efforts to expand credit access could be significantly enhanced by adopting a digitally driven model that incorporates online platforms, mobile technology, and data analytics. By aligning the NCGC with digital financial services, Nigeria can ensure that more people are able to access credit, while also ensuring that the system remains resilient to future disruptions, such as economic shocks or political instability. Looking toward future developments. As Nigeria prepares for the full-scale rollout of the NCGC in May 2025, several key developments will shape its success. The government will need to continue refining its plans and engage with stakeholders to ensure that the initiative meets the needs of Nigeria's diverse population. Key considerations include 1. Consumer protection and financial literacy. One of the biggest risks of expanding credit access is the potential for over-indebtedness. As credit becomes more accessible, borrowers must be educated on responsible borrowing practices. The NCGC should prioritize financial literacy programs that help Nigerians understand how to manage debt and avoid default. Furthermore, consumer protection laws should be strengthened to ensure that borrowers are not exploited by unscrupulous lenders. 2. Regional cooperation. Nigeria's success with the NCGC could have ripple effects across the region, and the country could serve as a model for other nations looking to address their own credit access challenges. Regional cooperation, particularly through the African Development Bank and the Economic Community of West African States, ECOWAS, could help ensure that lessons learned in Nigeria are shared with other countries, facilitating broader economic growth in West Africa and beyond. 3. Evaluating long-term impact. The true impact of the NCGC will only become apparent over time. As the program evolves, it will be crucial to assess its long-term effects on credit access, business growth, and overall economic development. Continuous monitoring, data collection, and stakeholder feedback will help fine-tune the initiative, ensuring it remains responsive to changing economic conditions and the needs of the Nigerian people. As these developments unfold, Nigeria's journey toward expanding credit access will likely provide valuable lessons for other African nations seeking to unlock the full potential of their economies. The NCGC could be a key driver of Nigeria's economic transformation, but only if it is executed with care, collaboration, and a commitment to ensuring that all Nigerians benefit from expanded credit access. Harnessing technological innovations for credit expansion. As Nigeria moves closer to the launch of the National Credit Guarantee Company, NCGC, leveraging technological innovations will be essential for maximizing the impact of this initiative. The global shift toward digital financial services presents an unprecedented opportunity for Nigeria to enhance its credit access system, particularly for underserved populations. 1. Mobile technology and financial inclusion. Nigeria is home to one of the largest mobile phone user bases in Africa, with millions of people across the country using mobile phones for communication, banking, and e-commerce. The integration of mobile financial services into the NCGC framework could be a game changer in terms of expanding credit access. Fintech platforms such as Flutterwave, Paystack, and Paga have already demonstrated how mobile technology can facilitate seamless payments and financial transactions. By incorporating mobile banking and lending platforms into the NCGC, Nigeria can ensure that even people in remote areas who may not have access to traditional banking services can apply for credit, access loans, and participate in the formal financial system. 2. Blockchain technology for transparent transactions. Blockchain technology, known for its secure and transparent nature, could play a pivotal role in the NCGC. By utilizing blockchain, Nigeria could ensure that transactions are immutable and transparent, making it easier for both lenders and borrowers to track the movement of funds and monitor the status of loans. Additionally, blockchain can help streamline loan application processes and reduce fraudulent activity, which has often been a challenge in the financial sector. Incorporating blockchain-based systems into the NCGC could boost confidence in the program, particularly among private investors and multilateral institutions that are critical to its success. 3. Big data and artificial intelligence, AI. The use of big data and AI to assess creditworthiness could also revolutionize Nigeria's credit landscape. Traditional credit scoring systems often rely on limited information, which can exclude individuals and businesses with limited financial histories. However, the integration of big data analytics could provide a more comprehensive view of a borrower's financial behavior, including non-traditional data such as mobile payment history, utility bill payments, and even social media activity. AI-powered credit scoring systems could assess this data to make more accurate predictions about a borrower's ability to repay, reducing the risk for lenders and expanding access to credit for previously underserved populations. 4. Financial literacy programs through digital channels. With the NCGC's potential reach extending to rural and remote areas, the need for digital financial literacy programs becomes even more crucial. Using mobile apps, online platforms, and even social media channels, the Nigerian government can educate the public about the importance of responsible borrowing, debt management, and financial planning. Programs that teach financial literacy in a digestible format, such as through videos, interactive quizzes, and text-based resources, could help reduce the risk of over-indebtedness. Additionally, by collaborating with fintech companies, the government can integrate educational content into existing platforms that Nigerians are already using, making it easier for people to learn about credit while engaging in their daily financial activities. Collaborating with multinational development organizations. For Nigeria's NCGC to succeed, the collaboration with international and multilateral development organizations will be vital. While the Nigerian government is taking the lead in setting up the program, the involvement of international partners can provide much-needed financial backing, expertise, and credibility. These partnerships can bring in valuable knowledge of best practices, risk management strategies, and financial technologies that can help Nigeria avoid common pitfalls and accelerate the success of its credit expansion program. 1. International financial institutions, the World Bank, African Development Bank, AFDB, and International Monetary Fund, IMF, have long been involved in supporting African nations in their quest to improve financial systems and increase credit access. These institutions have already provided financial assistance and technical support for various financial inclusion programs across the continent. For Nigeria, engaging these organizations could secure essential funding and technical expertise, ensuring that the NCGC operates on a sound financial footing and is aligned with international standards. 2. Bilateral partnerships and private sector involvement. In addition to multilateral organizations, Nigeria could also forge bilateral partnerships with countries that have successfully expanded credit access, such as South Africa and Kenya. These nations can share their experiences and lessons learned, helping Nigeria avoid common mistakes and speed up the implementation process. Furthermore, the private sector, both locally and internationally, has a significant role to play. International banks, venture capital firms, and impact investors could be incentivized to participate in the NCGC, offering funding and resources to businesses that qualify for credit under the scheme. 3. Crowdfunding and social investment initiatives. Crowdfunding and social impact investments are emerging as alternative sources of funding for initiatives such as the NCGC. By tapping into these alternative funding channels, the Nigerian government can diversify its financial support base and attract investors who are interested in making a positive social impact. For example, the development of green bonds and social bonds, which raise funds for projects with positive environmental or social outcomes, could help attract new sources of capital to support the expansion of credit access in Nigeria. Sustainability of the National Credit Guarantee Company. One of the most important aspects of the NCGC initiative will be ensuring its long-term sustainability. While the government is taking significant steps to provide initial funding and institutional support, the program will need to be financially self-sustaining over time to avoid becoming a drain on public resources. There are several strategies that could help ensure the longevity of the NCGC. 1. Loan repayment and recycling of funds. As loans are dispersed through the NCGC, repayment from borrowers will generate funds that can be recycled into new loans. To ensure that the NCGC continues to function without depending on continuous government support, the government should set up systems that encourage prompt repayment and discourage loan defaults. This could include offering incentives for early repayment or applying interest rates that are conducive to long-term loan sustainability. 2. Creating a reserve fund. To mitigate risks associated with defaults, the Nigerian government could establish a reserve fund that would act as a buffer in case of widespread loan repayment issues. This fund could be built over time through a portion of the loan repayments, which would serve as a safety net in the event of an economic downturn or other financial challenges that affect the ability of borrowers to repay their loans. 3. Partnerships with commercial banks. Collaboration with commercial banks could further strengthen the NCGC's sustainability. By providing a mix of public and private sector funding, the NCGC can build credibility with the financial market, reduce the burden on taxpayers, and encourage continued lending activity from the private sector. In return, commercial banks could benefit from the risk-sharing mechanism provided by the NCGC, which would allow them to expand their lending portfolios while minimizing their exposure to risk. Key metrics for success. For the NCGC to be deemed successful, a set of key performance indicators, KPIs, must be established and regularly assessed. These metrics will provide insights into how well the program is functioning and whether it is meeting its objectives of expanding credit access, supporting business growth, and fostering economic development. Some important metrics to monitor include: 1. Credit access expansion. Tracking the number of loans disbursed, the total value of credit extended, and the number of new borrowers will be crucial in assessing whether the NCGC is achieving its goal of expanding credit access. Special attention should be paid to ensuring that underserved populations, such as women and youth, are benefiting from the program. 2. Loan repayment rates. Monitoring loan repayment rates will be essential for ensuring the long-term viability of the NCGC. High default rates could indicate problems with loan terms, credit assessment procedures, or the overall economic environment. 3. Impact on job creation and economic growth. Ultimately, the NCGC's success should be measured by its ability to stimulate job creation, economic growth, and poverty reduction. By tracking changes in employment rates, GDP growth, and business activity, Nigeria can evaluate whether the expanded access to credit is leading to tangible improvements in the economy. As Nigeria continues to prepare for the launch of the NCGC, it is crucial that the government, financial institutions, and other stakeholders remain committed to ensuring that the program is inclusive, transparent, and sustainable. By leveraging technology, fostering partnerships, and maintaining a focus on financial literacy, Nigeria can unlock the full potential of its credit system and stimulate broad-based economic growth for years to come. The role of the Nigerian government in ensuring success. The Nigerian government will have a crucial role to play in ensuring that the National Credit Guarantee Company, NCGC, functions effectively and achieves its objectives. While the NCGC is a step in the right direction for credit expansion, it will require strong governance, clear policies, and consistent support from the government to realize its full potential. 1. Policy consistency and regulatory support. One of the challenges that many African nations face when introducing large-scale financial initiatives is policy inconsistency. Frequent changes in government policies, coupled with shifting regulatory frameworks, can create an environment of uncertainty that deters investment and hinders the success of initiatives like the NCGC. To ensure its success, the Nigerian government must maintain a clear and consistent policy approach toward credit access, financial inclusion, and economic reforms. Regulatory frameworks must be streamlined, predictable, and supportive of long-term objectives, which will provide businesses and individuals with the stability they need to confidently engage with the NCGC. 2. Creating enabling conditions for private sector engagement. The private sector's involvement is essential for the success of the NCGC, as the government alone cannot provide all the funding necessary for the initiative. Nigeria's government must take deliberate steps to create an enabling environment that encourages private institutions to participate. This may include offering tax incentives, reducing bureaucratic hurdles, and ensuring that financial institutions are adequately protected against risks. In addition, public-private partnerships, PPPs, could be leveraged to mobilize the resources and expertise needed to maximize the NCGC's impact. 3. Addressing corruption and ensuring transparency. A key challenge for Nigeria's credit expansion efforts has been its struggle with corruption, which could undermine the NCGC if not effectively addressed. To build trust with both domestic and international stakeholders, the Nigerian government must prioritize transparency and accountability in the implementation of the NCGC. Strict anti-corruption measures and regular audits of the program will be essential to maintain public confidence and ensure that funds are used effectively. Additionally, a transparent grievance mechanism must be established so that borrowers and stakeholders can raise concerns or report issues without fear of retaliation. International partnerships and Africa-wide implications. While the Nigerian government plays a critical role in shaping the NCGC, international partnerships will be equally important for the program's success. Collaboration with global financial institutions, bilateral development agencies, and international banks can provide not only financial backing, but also technical expertise. Moreover, Nigeria's success could serve as a model for other African nations with similar challenges regarding credit access and financial inclusion. 1. Regional cooperation and knowledge sharing. As other African nations look to expand access to credit, the Nigerian experience could provide valuable lessons on what works and what doesn't. Nigeria's participation in the African Union, AU, and the Economic Community of West African States, ECOWAS, provides an excellent platform for sharing insights with neighboring countries and collaborating on financial inclusion strategies. In this regard, regional cooperation can help strengthen the capacity of other West African nations to establish similar programs tailored to their unique economic and financial challenges. Moreover, knowledge sharing between Nigeria and countries like South Africa, Kenya, and Ghana, who have also made strides in improving financial inclusion, could help avoid pitfalls and refine the approach taken by Nigeria. By adopting a regionally coordinated approach to credit expansion, African nations could create a more seamless financial ecosystem that fosters cross-border investment and economic integration. 2. Role of international financial institutions. International financial institutions, such as the World Bank, International Finance Corporation, IFC, and African Development Bank, AFDB, are well positioned to provide both funding and technical assistance to Nigeria's NCGC initiative. These institutions have supported similar credit expansion initiatives across the continent and can offer invaluable guidance on best practices, risk management, and ensuring that the NCGC remains financially sustainable. In addition to providing loans or guarantees, these institutions could offer capacity building programs and technical support to enhance the effectiveness of the NCGC, particularly in areas such as risk assessment, credit scoring, and financial literacy. The involvement of international financial institutions will also help ensure that the NCGC aligns with international standards in terms of governance, transparency, and financial reporting, which will further increase confidence in the program. 3. The impact on intra-Africa trade. The NCGC's potential to enhance credit access could have broader implications for Africa's economic integration. Intra-Africa trade remains underdeveloped, largely due to limited access to financing and credit for businesses. By improving access to credit, Nigeria could set a precedent for other African countries to follow, helping to unlock the potential of small and medium-sized enterprises, SMEs, across the continent. These SMEs, often constrained by a lack of capital, could significantly benefit from expanded credit access, enabling them to participate more actively in cross-border trade. As businesses gain access to financing, they will be better equipped to meet the growing demand for goods and services across Africa, thus fostering greater economic cooperation between African nations. Optimizing the credit guarantee system. For the NCGC to achieve its objectives, it will be essential to optimize the credit guarantee system in a way that balances financial risk and rewards. Some strategies that can help optimize the system include: 1. Tailoring credit products to specific sectors. Different sectors in Nigeria face distinct challenges when it comes to accessing credit. For instance, the agricultural sector, which employs a large portion of the population, has its own unique financing needs. Tailoring credit products to specific sectors like agriculture, technology, and manufacturing can help address sector-specific challenges and encourage growth in these key areas. For example, providing lower interest loans or longer repayment terms for farmers and agribusinesses could boost agricultural output and food security. Likewise, offering credit products that cater to the needs of tech startups could drive innovation and expand Nigeria's burgeoning tech sector. 2. Establishing clear risk-sharing guidelines. One of the central features of the NCGC will be its ability to share risks between the government and private lenders. However, the exact mechanics of this risk sharing will need to be clearly defined to avoid confusion and disputes. Establishing clear guidelines for how risks will be allocated, under what conditions the government will step in to absorb losses, and the limits of credit guarantees will be critical for the program's success. Lenders need to understand exactly what protections are in place, and borrowers must be aware of their responsibilities and the terms of their loans. 3. Monitoring and evaluation systems. It is essential to implement robust monitoring and evaluation systems to track the performance of the NCGC. These systems will not only assess the impact of the credit guarantees on businesses and individuals, but also identify potential issues early on, such as loan defaults or mismanagement. Regular audits and data collection will allow stakeholders to identify weaknesses in the program and make adjustments as necessary. Moreover, an effective monitoring system will increase transparency and reduce the risk of fraud and abuse, which could undermine the credibility of the NCGC. Looking toward the future, a model for financial inclusion. The NCGC represents a transformative opportunity for Nigeria to overcome its historical challenges with credit access and financial inclusion. If successfully implemented, it could not only boost Nigeria's economic growth, but also serve as a model for other African countries. By improving access to credit, stimulating innovation, and supporting small businesses, Nigeria has the chance to lay the foundation for a more inclusive, prosperous future. However, the government must stay focused on ensuring that the system is sustainable, transparent, and responsive to the needs of all Nigerians, particularly those who have been excluded from the financial system in the past. If Nigeria can navigate the challenges ahead and successfully implement the NCGC, it could become a key driver of economic development not only for Nigeria, but for the entire African continent. In the coming months, it will be crucial to watch the progress of the NCGC's implementation as the financial sector, government agencies, and international stakeholders work together to bring this ambitious initiative to life. The outcome of this program will have lasting effects on the Nigerian economy, and by extension, the broader African financial ecosystem. As such, Nigeria's journey toward expanding credit access will be closely watched, with the hope that it sparks a new wave of financial inclusion and economic empowerment across the continent. The role of education and public awareness in ensuring success. For the NCGC to achieve its goal of expanding credit access, there must be a concerted effort to raise public awareness about the program and educate Nigerians on how to responsibly use credit. Financial literacy remains a critical gap in Nigeria, with many individuals and businesses lacking the knowledge necessary to navigate the complex world of credit. 1. Financial literacy programs. Financial literacy initiatives should be a core component of the NCGC strategy. The Nigerian government, in collaboration with financial institutions, should launch widespread education campaigns aimed at informing citizens about the importance of credit, how to assess their borrowing needs, and the implications of taking on debt. These programs should not only target individuals, but also focus on small business owners who may lack the necessary financial knowledge to make informed decisions about borrowing and repaying loans. Furthermore, schools, universities, and vocational institutions should integrate financial education into their curricula to ensure that future generations are equipped with the skills necessary to manage finances effectively. Given the increasing role of digital platforms in financial services, financial literacy programs should also focus on educating Nigerians about digital banking, mobile money services, and fintech solutions, which are becoming essential for accessing credit in today's financial landscape. 2. Collaboration with financial institutions. Nigeria's financial institutions will be key partners in educating the public about credit products and ensuring responsible borrowing. Banks, microfinance institutions, and insurance companies must work together with the government to provide educational resources that simplify complex financial concepts. They could also offer workshops and seminars for businesses and individuals interested in applying for credit. Providing clear, concise, and easily accessible information about loan terms, repayment schedules, and interest rates will help potential borrowers make informed decisions. One potential avenue to explore is the creation of interactive platforms, such as mobile apps or websites, that offer real-time guidance to users about available loan options, repayment tools, and tips on maintaining a healthy credit score. Such initiatives would not only educate Nigerians, but also empower them to take control of their financial futures. 3. Public awareness campaigns. In addition to educational programs, the Nigerian government should invest in public awareness campaigns to promote the NCGC initiative itself. Many Nigerians may not be aware of the credit opportunities available to them, especially in rural and underserved regions. These campaigns should target both urban and rural areas, ensuring that all citizens, regardless of location, are informed about how the NCGC works, how to apply for credit, and what the program offers. The campaign should also emphasize the role of the NCGC in empowering women and youth, two groups that have historically faced significant barriers to accessing credit. By highlighting success stories of individuals and businesses that have benefited from credit expansion, the government can build trust in the program and motivate more people to participate. Addressing the digital divide. As Nigeria aims to expand credit access, one of the most significant challenges will be bridging the digital divide. Although Nigeria has seen significant improvements in mobile phone penetration and internet connectivity, large portions of the population, particularly in rural areas, still lack reliable access to digital financial services. Without addressing this gap, many Nigerians may find it difficult to take full advantage of the NCGC, which may rely heavily on digital platforms for loan applications, repayments, and financial education. 1. Improving internet and mobile connectivity. Expanding internet access and improving mobile connectivity in underserved regions should be a priority for the Nigerian government. Reliable and affordable internet access will be essential for enabling Nigerians to engage with digital credit systems and financial literacy platforms. By working with mobile network providers and internet service companies, the government could implement initiatives to improve coverage in remote areas, making it easier for people to apply for credit, access financial services, and receive the necessary support for responsible borrowing. 2. Offline solutions for the underserved. While digital platforms will play a crucial role in expanding credit access, it is important not to overlook Nigerians who do not have reliable internet access or smartphones. The NCGC should offer alternative ways to access credit and financial education for these populations, such as through community centers, mobile banking agents, or local banks that can help facilitate loan applications and repayments. Additionally, paper-based financial literacy materials should be made available to ensure that no one is left behind in the digital push for financial inclusion. Tracking progress and adjusting policies. As the NCGC rolls out across Nigeria, it will be essential to track its progress and make necessary adjustments to improve its impact. A robust monitoring and evaluation system must be put in place to assess the program's effectiveness and ensure that it meets the needs of Nigerians. 1. Establishing key performance indicators, KPIs. To ensure that the NCGC is achieving its objectives, clear and measurable key performance indicators, KPIs, should be defined from the outset. These could include metrics such as the number of loans disbursed, the total value of credit extended, the repayment rate of loans, and the impact of the program on employment and poverty reduction. Additionally, specific KPIs related to the program's focus on gender and youth inclusion, such as the number of women and young people who access credit, should be tracked to ensure that the program is reaching these underserved groups. Regular data collection, analysis, and reporting will be necessary to assess the effectiveness of the NCGC and identify areas for improvement. Feedback from borrowers, lenders, and other stakeholders should also be used to refine the program and adjust policies as needed. 2. Feedback. Loops and public participation. Public participation in the evaluation process will be critical for ensuring that the NCGC remains responsive to the needs of Nigerians. The government should establish feedback loops that allow borrowers and other stakeholders to provide input on their experiences with the program. Regular consultations with the public, financial institutions, and development partners will help ensure that the NCGC remains relevant and effective. Additionally, the government should consider establishing an independent body or ombudsman to oversee the implementation of the NCGC, ensuring that it is operating fairly and transparently. This independent body could also serve as a point of contact for individuals or businesses that encounter problems with the credit system, providing an avenue for complaints and dispute resolution. Global and regional lessons for the NCGC. Nigeria's NCGC initiative offers a unique opportunity to explore how credit access and financial inclusion can be improved across the African continent. As the program develops, Nigeria can draw valuable lessons from other countries that have implemented similar initiatives. 1. Kenya's M-Pesa and mobile credit solutions. Kenya's success with mobile financial services, particularly M-Pesa, has shown the potential of using mobile platforms to enhance financial inclusion. Nigeria can look to Kenya's experience to incorporate mobile solutions into the NCGC, ensuring that Nigerians can access credit through their mobile phones, bypassing the need for traditional banking infrastructure. The success of mobile lending platforms like M-Shwari, which enables small loans through M-Pesa, could provide valuable insights for Nigeria's mobile credit programs. 2. Ghana's microfinance programs. Ghana has had success with microfinance institutions that provide small loans to businesses and individuals who have limited access to traditional banking services. Nigeria could use Ghana's experience as a model for developing credit products that cater to the needs of the informal sector and small businesses. Microfinance institutions could play an important role in the NCGC's implementation, especially for entrepreneurs in rural areas. 3. South Africa's national credit regulator. South Africa's national credit regulator has worked to promote financial inclusion by ensuring that lenders operate fairly and transparently. South Africa's focus on consumer protection and financial literacy could be a useful model for Nigeria. By ensuring that borrowers understand their rights and responsibilities, Nigeria could minimize the risk of over-indebtedness and create a more sustainable credit ecosystem. Moving forward, as Nigeria embarks on the ambitious journey of expanding credit access through the NCGC, it must navigate a complex landscape of challenges and opportunities. The success of this initiative depends on a variety of factors, including effective governance, public awareness, digital infrastructure, and collaboration with international partners. If Nigeria is able to overcome these obstacles, the NCGC has the potential to transform the country's financial landscape, driving economic growth, job creation, and financial inclusion for millions of Nigerians. The program's success could also have broader implications for the rest of Africa, providing a valuable model for other nations struggling with similar financial inclusion challenges. As Nigeria moves toward the full implementation of the NCGC in May 2025, all eyes will be on its progress and the impact it has on expanding credit access and promoting sustainable economic development across the continent. By focusing on technology, public awareness, collaboration with stakeholders, and robust monitoring, Nigeria can lay the foundation for a more inclusive, equitable financial future for all its citizens. Building strategic partnerships with the private sector. For the National Credit Guarantee Company, NCGC, to thrive and achieve its goals of expanding credit access and fostering economic growth, strategic partnerships with the private sector will be essential. The involvement of commercial banks, microfinance institutions, insurance companies, and fintech platforms will not only bolster the reach of the initiative, but also provide the necessary financial infrastructure and expertise to make it a success. 1. Collaboration with commercial banks. Commercial banks are crucial players in Nigeria's financial ecosystem. These institutions already have extensive networks, customer bases, and resources that can be leveraged to help distribute credit to a wider population. The NCGC will need to collaborate closely with these banks to facilitate lending to underserved groups, such as small businesses, women, and rural populations. To encourage their participation, the Nigerian government could consider offering financial incentives or lowering regulatory burdens for banks that engage with the NCGC. This partnership could help mitigate the risks associated with lending to new or smaller borrowers by providing a safety net through the credit guarantee. 2. Microfinance institutions and lending to the informal sector. Microfinance institutions, MFIs, play a pivotal role in providing financial services to individuals and businesses in the informal sector. Given the significant number of micro-entrepreneurs in Nigeria, particularly in the agriculture, retail, and service sectors, microfinance institutions can contribute to the NCGC's success by offering tailored loan products that meet the needs of small businesses and self-employed individuals. The NCGC could partner with MFIs to ensure that the credit guarantee system includes low-interest loans and flexible repayment terms for informal sector workers who may lack the formal credit history typically required by commercial banks. These partnerships will also ensure that the NCGC benefits those who are most in need of financial support. 3. Engaging with fintech companies. Nigeria has seen an explosion of fintech startups, and many of these companies specialize in providing digital lending, mobile payments, and microloans. These platforms, such as Carbon, Fair Money, and Branch, have demonstrated the potential to deliver financial products quickly and efficiently to underserved populations. By partnering with fintech companies, the NCGC can reach a larger pool of potential borrowers who are already using mobile phones and online platforms for financial transactions. The partnership could involve fintech companies providing data analytics and alternative credit scoring systems, enabling the NCGC to assess a wider range of borrowers and better gauge their ability to repay loans. Additionally, the digitization of loan applications and disbursement processes can streamline operations and reduce costs, improving the overall efficiency of the program. 4. corporate social responsibility, CSR, and impact investments. Large corporations and multinational companies can also play a role in supporting the NCGC through their corporate social responsibility, CSR programs or impact investments. Many companies are increasingly focused on Sustainable Development Goals, SDGs, and supporting initiatives that promote financial inclusion and economic empowerment aligns with these goals. Companies can contribute to the NCGC by offering grants, low-cost financing, or mentorship to small businesses and entrepreneurs. In exchange, they could benefit from the positive public relations associated with supporting an initiative that promotes economic development and inclusion. Moreover, such partnerships can provide businesses with access to new markets and opportunities in previously underserved regions. Impact of the NCGC on employment and job creation. One of the key objectives of the NCGC is to stimulate economic growth by facilitating access to credit for businesses, particularly small and medium-sized enterprises, SMEs. By making capital more accessible, the program has the potential to foster the creation of new businesses and jobs, which is vital for a country like Nigeria, where unemployment remains a significant issue. 1. Supporting job creation in SMEs. Small and medium-sized enterprises are the backbone of many economies, and Nigeria is no exception. SMEs employ a large percentage of the workforce and contribute to the country's GDP. However, many of these businesses struggle to secure the funding they need to expand or innovate due to a lack of access to credit. By providing these businesses with the capital to grow, the NCGC can help create jobs in a variety of sectors, including manufacturing, agriculture, retail, and technology. As businesses expand, they will need to hire additional staff, providing new job opportunities for Nigerians. 2. Boosting entrepreneurship. Nigeria has a growing culture of entrepreneurship, with many young Nigerians seeking to start their own businesses. However, access to financing has often been a barrier to entry. By improving access to credit, the NCGC can empower aspiring entrepreneurs to turn their business ideas into reality. As more entrepreneurs enter the market and successfully scale their businesses, they will contribute to job creation and economic diversification. The NCGC could provide tailored loan products for startups, allowing them to access seed capital or working capital to fund their operations, marketing, or product development. 3. Fostering innovation and technological development. The NCGC can also have a significant impact on innovation in Nigeria. By providing financing to businesses in the technology sector, the program could help foster the growth of Nigeria's burgeoning tech industry. Nigeria has already become a hub for tech startups in Africa, and further investment in this sector could lead to the development of new products, services, and solutions that address local and global challenges. By supporting innovation, the NCGC could contribute to the growth of a knowledge-based economy, providing high-skilled jobs in areas such as software development, engineering, and digital marketing, improving the business environment for long-term growth. While expanding access to credit is crucial, it is equally important to create a conducive environment for businesses to thrive. The NCGC will be most effective when paired with broader economic reforms aimed at improving the overall business environment in Nigeria. 1. Ease of doing business. One of the key factors that affect the growth of businesses in Nigeria is the complex and often burdensome regulatory environment. The Nigerian government should continue efforts to simplify the process of starting and operating a business. This includes reducing red tape, improving the efficiency of business registration, and making it easier for entrepreneurs to obtain permits and licenses. By improving the ease of doing business, the government can make it easier for businesses to access credit and thrive, ensuring that the NCGC reaches its full potential. 2. Infrastructure development. In addition to financial access, the development of infrastructure, such as reliable electricity, transportation networks, and internet connectivity, will be crucial for businesses looking to grow and expand. The Nigerian government must continue to invest in infrastructure to create an environment that supports economic activity and attracts investment. Adequate infrastructure will help businesses operate more efficiently, reduce costs, and increase their competitiveness in both local and global markets. 3. Strengthening the rule of law and reducing corruption. For businesses to thrive, there must be confidence in the rule of law and a fair legal system. Corruption and weak enforcement of contracts are significant challenges in Nigeria's business environment. The NCGC will only be effective if businesses believe that their rights will be protected, that they will not face undue regulatory or financial barriers, and that they can rely on the legal system to resolve disputes. Strengthening the rule of law and reducing corruption will improve the overall business climate, making Nigeria more attractive to investors and entrepreneurs. Challenges in addressing credit risk and over-indebtedness. As Nigeria seeks to expand credit access, there are inherent risks associated with lending, particularly when dealing with underserved populations and businesses that may lack formal credit histories. Managing credit risk will be critical to ensuring the sustainability of the NCGC. 1. Risk of over-indebtedness. One of the major risks associated with expanding credit access is the potential for over-indebtedness, where borrowers take on more debt than they can afford to repay. This risk is especially pronounced when credit is extended to individuals or businesses with limited financial literacy or experience managing debt. To mitigate this risk, the NCGC will need to ensure that borrowers are adequately screened and that they fully understand the terms of their loans. Financial literacy programs will play a key role in helping individuals and businesses make responsible borrowing decisions. Additionally, the NCGC could implement mechanisms such as debt-to-income ratios or other risk assessment tools to ensure that borrowers do not take on more debt than they can manage. 2. Credit default risk. Another challenge is the risk of defaults, particularly in the early stages of the NCGC's implementation. To mitigate this, the Nigerian government must work with financial institutions to develop a sound risk-sharing framework that ensures lenders are adequately protected against losses. This may include offering guarantees or collateral that can be used in the event of a default. By managing default risk effectively, the NCGC can build the confidence of both lenders and borrowers, ensuring the long-term success of the program. A bright future for financial inclusion in Nigeria. The launch of the National Credit Guarantee Company represents a bold step towards transforming Nigeria's credit landscape and unlocking the economic potential of its citizens. By improving access to credit, supporting small businesses, fostering innovation, and addressing the needs of underserved populations, the NCGC can play a pivotal role in driving economic growth and job creation across the country. However, for this initiative to succeed, it will require careful planning, collaboration, and oversight from the Nigerian government, financial institutions, and international partners. By addressing key challenges such as financial literacy, digital access, and infrastructure, and by fostering a business environment that supports entrepreneurship and innovation, Nigeria can build a more inclusive and sustainable financial ecosystem. As the NCGC begins its rollout in May 2025, the world will be watching closely to see whether it can live up to its ambitious goals. If successful, it could not only transform Nigeria's economy, but also serve as a model for other African countries seeking to expand access to credit and promote financial inclusion on the continent. With the right approach and support, Nigeria can become a leader in economic empowerment and financial innovation in Africa. Strengthening the institutional framework for long-term success. For the National Credit Guarantee Company, NCGC, to achieve sustained success, it will be essential to establish a solid institutional framework that ensures efficient management, accountability, and responsiveness to changing economic conditions. Institutional capacity building, transparency in governance, and continuous evaluation will be key to the NCGC's long-term viability. 1. Institutional capacity building. The government must ensure that the NCGC is equipped with the necessary human resources, technology, and processes to function effectively. This will involve investing in training for personnel within the company, as well as creating systems that allow for smooth collaboration with other institutions, such as the Bank of Industry, private banks, and fintech companies. Additionally, the NCGC should build its internal systems to be agile and responsive to both local and global economic shifts, ensuring that it can adjust its approach to meet new challenges as they arise. 2. Building trust through transparency. For the NCGC to inspire confidence among lenders and borrowers alike, it must operate with the highest levels of transparency. Clear communication about loan terms, repayment conditions, and the role of financial institutions in the program will be crucial in ensuring that all parties understand the parameters of the credit guarantee scheme. Furthermore, regular audits, performance evaluations, and public reporting on the outcomes of the program will help maintain accountability and build trust with the Nigerian public and international stakeholders. 3. Continuous monitoring and evaluation. Monitoring and evaluation, M&E mechanisms, should be embedded in the NCGC's operational framework. These systems should track key performance indicators, KPIs, such as the number of loans disbursed, the sectors benefiting from credit, the repayment rates, and the impact on employment and economic growth. Additionally, the government should engage independent evaluators and utilize data-driven approaches to continuously improve the NCGC and ensure its alignment with Nigeria's broader economic objectives. The role of political will in achieving success. The successful implementation of the NCGC will ultimately depend on strong political will and commitment. While the program's design and technical aspects are critical, its execution will require unwavering support from the highest levels of government. President Bola Tinubu and subsequent leaders must demonstrate that financial inclusion is a priority by allocating sufficient resources, creating a conducive environment for business growth, and taking the necessary steps to combat corruption and ensure the program's success. Advice to African leaders. As Nigeria embarks on this ambitious journey, there are valuable lessons to be learned for other African nations that face similar challenges with access to credit, financial inclusion, and economic growth. For African leaders, the key takeaway is that improving credit access can act as a powerful lever for economic transformation. The Nigerian model, if successful, could serve as a blueprint for other countries to emulate. However, leaders must understand that credit access alone is not enough. It must be accompanied by complementary measures such as 1. Strengthening legal and regulatory frameworks. Effective legal systems that protect property rights, enforce contracts, and ensure a fair lending environment are fundamental for the success of credit expansion programs. Leaders should focus on strengthening the rule of law and improving the business climate to foster private sector growth. 2. Fostering a culture of entrepreneurship. Beyond access to credit, governments must cultivate an entrepreneurial mindset through education and policy support. Creating a robust support system for entrepreneurs, including mentorship programs, incubators, and access to market information, will help turn credit access into tangible economic outcomes. 3. Investing in infrastructure and technology. Infrastructure and technological innovation are key enablers of financial inclusion. Leaders should invest in digital infrastructure, including mobile banking networks, broadband access, and payment systems, to ensure that financial services reach all corners of the country. Additionally, supporting the growth of the fintech ecosystem can enhance the efficiency of credit distribution. 4. Focusing on long-term sustainability. Leaders should prioritize the long-term sustainability of credit expansion initiatives. By ensuring that financial systems are resilient and well-managed, countries can avoid the risks of over-indebtedness, bad loans, and economic instability. A sustainable approach to credit access ensures that future generations benefit from the policies implemented today. Summary of key messages. The National Credit Guarantee Company, NCGC, in Nigeria, represents a bold and transformative step towards improving financial inclusion and driving economic growth. By enhancing access to credit for underserved populations, including small businesses, women, and youth, the NCGC has the potential to stimulate entrepreneurship, job creation, and innovation across the country. However, its success will depend on several critical factors, including strong governance, effective partnerships with the private sector, widespread financial literacy programs, and the ability to manage risks such as over-indebtedness and defaults. As Nigeria moves forward with this initiative, it offers valuable lessons for other African nations seeking to address similar challenges. Leaders across the continent should focus on creating inclusive financial systems, strengthening legal frameworks, fostering entrepreneurship, and ensuring the sustainability of credit programs. The successful implementation of the NCGC could serve as a model for other African countries to follow, proving that by addressing financial access, governments can empower their citizens, create opportunities for economic advancement, and lay the foundation for a more prosperous and sustainable future. With the right strategies, collaboration, and political will, Nigeria can lead the way in demonstrating the transformative power of financial inclusion for all Africans. Thanks for watching this episode of The Bold African Voice, BAV. If you found this analysis insightful, don't forget to like, share, and subscribe to our channel for more in-depth coverage of key African issues. Join the conversation in the comments below, and let us know your thoughts on Nigeria's Credit Access Initiative. Stay tuned for more updates and analysis as we continue to bring the bold stories shaping Africa's future.